Hello everyone, welcome to the Thursday session. Here we are at the Thursday session, ready for a bit of action, ready for a bit of fun. It's been a tough 24 hours as far as my trades have gone. They've kind of gone against me in quite a nasty way, man. Well, that's okay. We're used to that. But just to show you guys, in the last 24 hours, this funded trader account, we closed 3 positions in stop loss. As you can see, the first one stopped out by itself. Well, I actually stopped it out, but it was close to stop loss. Then we stopped out the JAP 225 and we stopped out the France 40. All 3 stopping out. So that's not good on this account. We had the US Japanese yen, we had it long, and the stop loss was moved up to about $600 in profit, and it got taken out it came back and it took it out as well. So that got taken out. Yesterday I had the DAX as a short trade. That got stopped out. Lost about $1,000 on that on this one. And then, so it's been a really nasty 24 hours, I've got to say. Anyway, so we're looking for the FTSE to go short as well later on. And we will look for the DAX again. And we will look for the France 40 again, which we got taken out on as well. We got taken out on that shortly. So yeah, how's it, Coral? How's it, Rama? Welcome to the wonderful day of trading. You know, here's the funny thing. The market will always fool you into a false sense of security. You don't know what's going to happen next. You never know what's going to happen next. And that's the fun thing about this game. But there was somebody who asked me about the percentage income that you target. So I'm going to get to that later on when everybody's here. And I'll try and explain that, because somebody did ask, what do you target? How much percentage do you target? And that sort of thing. But there's a wider picture around that, because you've got to understand that the market doesn't look at your little lines and squiggly lines and straightness and whatnot. You can have days like I've just had, and there's nothing you can do about that. So how can you have a daily target? You can't. You've got to have a wider perspective than that when you're looking at your targets. So we're going to get to that. We're going to talk about that today as well. If you've got any questions, throw them in the top chat. I got it here on the side so I can see you guys. And let's see how many guys we can get on the show today. If everybody wants to join us, whatever. I see some of the guys that do the live shows with the 5-minute charts and that sort of thing, because that's so exciting. They get like thousands of people on at any one time. I don't think I'm ever going to get to that, but we'll try. You never know. You never know your luck. You never know what we're going to get to. We work on a slower basis. We work on a swing trading basis. We work on a 4-hour basis, because, as I've told you guys, 99% of traders that try to trade 5-minute charts will lose. And you'll see in one of the videos I talk about the guy who lost $300,000 and his wife called for help. And it's just kind of scary to see that can happen to someone, because they were so addicted to the trading and they made some serious mistakes. But I've put that in the next video, I think, so you can have a look at that. And it's quite interesting, quite an interesting story. I actually knew another trader who kept his trades in over the weekend. And as you know, on the weekend, the market's closed. So your stop losses are also closed. There's no automated stop losses over the weekend. I hope you guys know that. And he woke up on Monday morning and it was all gone, So these are the dangers of trading. If you're not careful, you can wake up to quite a lot of pain if you're not sure what you're doing. So yes, trades yesterday and today and this week. France 40, we were short, got taken out, but it looked good. But I got in early, and that's my fault again. You see, we make the same mistakes no matter how long we've been trading. I didn't wait for the candle to close, and it went against me. The Nikkei, I actually was short. We made some money. It went back. I moved the stop loss into profit. It got taken out. And then I got back in again thinking, well, it's turning again, and it didn't. So once again, I got in too early, my mistake. The US dollar Japanese yen was a really good trade. It was going really well. It was going nicely for us. But unfortunately, what happened there, I moved my stop loss way into profit somewhere here, yeah. And it came back, and you can see the spike. It took it out. But I had $600 in profit, so it's okay. It's not a big deal. It was a decent profit on that one. Unfortunately, I didn't have that one on the funded trader account. So that, yeah, okay. That's one of those things. Looking forward to a trade on the FTSE if that comes about. For those of you that trade Bitcoin, it has stayed in its little range, which is quite nice. It's trading in a trend. So that's actually quite decent. US 500 is going to the moon because there's your little, well, I suppose you could call it a flag pattern, no? Straight up pole, flag, straight up, and it's also broken through its resistance. So it's going up like gold. How's it, Andrew? Yes, I'm Team Logical. That's me. How's it going? Welcome. Yeah, so that looks decent. The DAX, well, yeah, that actually surprised me, to be quite honest. But yeah, that's how it goes. It always does surprise you. That's quite a big shoot up to the moon as well. Will that last? Will that hold? Don't know. We'll have to see if it holds. Like I say, you never know what's going to happen. The market doesn't care. The market is not going to follow your rules. If you have rules and you draw a little line in here and you say, well, it's going to go down there, the market's not going to follow those rules, that's for sure. You see, once you get around the fact that you look at it and you say, wow, these little squiggly lines are not just lines, they're human beings, then you get a bigger picture. Yeah, of course we use the daily bias, absolutely. It's important to do that. We go to the day chart quite often, weekly, nothing wrong with that. So yeah, that's all good. There's about 15 of us on now, so it's growing. I'm just going to wait a little bit because, like I said, I did have the question regarding percentage income, and I want to talk about that to you guys. So I hope that person that asked that question does come on the live show, and they can let me know when they're here, and then we can give them their answer because they do want to know how to work with that. A lot of you guys want to get into trading to make a living, and I know you don't want to hear this, but it's really tough to make a living out of trading. There are professional guys out there that struggle to make a living out of trading. There's guys that work for example, companies. I'll just mention a few names like JP Morgan, BlackRock, these types of guys. They get specific amounts of trading, loads of trading information, and they go through courses, and they've got all kinds of paraphernalia and information at their fingertips. And these pros are sitting in those companies. And when you get into trading, you have to remember that you're trading against them. You're trading against these big guys out there that have got absolutely everything at their fingertips, all the information. They're highly trained pro traders. They've got information that you couldn't dream of having, and you're actually trading up against them. So just remember that when you get into the game. And if you want to make a living out of trading, it's not a simple concept. So it was you, Andrew. Fantastic. So here we are. I'm going to talk about that. Then I'm going to let you know all about that. Yes, chart time is the best teacher, and time in the market, because you'll notice in some of my videos I've actually said to you that if you think about it, I don't know what kind of trade you're in, or what kind of what you qualified as in your other life, let's say, before trading or with trading alongside. But if you go and study to become a lawyer, or if you go and study to become a doctor, or if you go and study to become an accountant, or whatever you study to become, you don't learn to do that in a day. You don't learn to do that in a week, and you don't learn to do that in even a month. It takes years. It takes years of study to perfect those trades. But we believe by getting into trading that we can somehow learn to do this in a day. And maybe it's because of the mindset that you feel like it's some kind of a gamble or some kind of an easy thing, or it's a mathematical equation. But no, there's a lot more to it. There's a lot more to it with the psychology and that sort of thing behind it. And I believe that that's why most traders do fail, is because you've got the wrong mindset when you get into trading. You've got the mindset that you can sit down at a desk and on the first day you can start making money. And that's where one of the biggest mistakes are with traders when they get into trading. It takes a couple of years to actually get a good feel for what's going on. And you need to make a lot of mistakes, and you need to pay a lot of school fees. And even after 30 years, I still pay school fees. I still make mistakes. I still make the same mistakes I made for years in the past. And why? It's just the mindset. It's just the psychology of it, and sometimes you get too clever for the market. And the last thing you want to do is get too clever for the market. They say, stay in your lane. Don't get out of your lane, and that's always the big issue. The trading is all in your mind, and it's all in the psychology of it and all the rest of it. So Andrew, yeah, what percentage do you expect for a month? Well, you said it yourself here in the comment, or a year. This is the thing, because if you try and work out a percentage, let's say per day, per week, per month, it's too short a time period. And it may sound crazy, but it's actually too short a time period, because one of the big things you find in the market is, at the end of the day, the market has good months and bad months, good days, bad days, good weeks, bad weeks. But very seldom will you have an overall bad year, because once you've figured your way through the market, where you take your losses, you'll make your wins. Like I always say, market's a 50-50 game, but that 50-50 might not play out in a day. It might not play out in a week. You might have a week where you just lose every single trade. You definitely have a day like that. And, I've got a specific rule. If I lose 3 trades in a day, no more trades for the day. So effectively today, in the last 24 hours, I lost 3 trades. No more trades today. That's how I work, because it means something's wrong with the way I'm thinking, my mindset, or something's happening in the market that I just haven't picked up. And it's best to walk away from that and come back tomorrow and carry on. So what I look at is over a period of a year. And a period of a year, I like to see a 20% return. I at least like to see a 20% return. If I get a 10% return over a period of a year, I'm disappointed. I'm disappointed in that kind of return, because I can get that from the bank if I really try hard. Okay, not every time, but if you really try hard, you could get 10% from the bank. And at least, if you put it in a fixed deposit, you can actually get up to 12% at the moment in where I live. So why would I target 10%? So one of my main targets is I want to see at least a 20% return on an annual basis. Now, every year won't be the same. You'll have exciting years where you make a 50% return. You'll have bad years where you make a 10% return. But as long as you're kind of averaging out on a 20%, you'll be doing okay. But you obviously got to have the capital to go with that. But what I find is really great is if you can have on the side, what I've often, I don't know if you've heard me say this before, Andrew, is specifically I'm speaking to all of you guys, but Andrew did ask the question with investing. What I've mentioned to a lot of people is put money into equity, but not geared trading like this, not trading, just investments over a period of a long time. I'm not sure how old you are, Andrew, but the younger you are, the better. because if you can start early, it's much better. So, especially for the guys in their 30s and their 40s, you start putting money into an equity account. You buy 3, 4, 5, up to 10 shares eventually. And you just keep adding money to those shares on a monthly basis, whatever you can afford. If it's $1,000 a month, so be it. If it's 100, so be it. Just put what you can into that account. And as you grow with inflation and as your income becomes more, add more monthly, take a percentage of your income and put it in there. For example, I knew a lot of people that would take a percentage of their income and give it to the church, say, well, why can't you give it to yourself? Why can't you give it to your future investment? Then it works. You'll be surprised. It works better than a pension, because if you pick shares that are dividend paying shares, for example, now these shares all pay dividends. Some of these shares will actually pay sometimes up to 8% per annum. But even if they're only paying 5, 6% per annum, a couple of percent per annum, that's free money. They're paying you dividends on an annual basis while your investment is growing. So when you come back after 10 to 15 years, you'll be shocked and stunned at the amount of money that you've amassed in those shares, and not to mention the amount of income that you're receiving from those dividends on an annual basis. They normally pay quarterly, sometimes half yearly. And it's actually quite phenomenal. If you own, for example, a McDonald's and a Coca-Cola and a Nvidia and a this one and a that one, and you just keep putting the money in and it just keeps growing over time, all you've got to do is keep one small eye on your investments. You don't have to watch it like you watch these trades. And you just keep one eye on it just to make sure one of the companies isn't having a bad hair day, for example, and going down the bathroom sink or something to that effect. If that starts to happen, if you start to see some bad results coming out of a company and you don't believe in that company anymore and you think, do you know what, I think McDonald's is going to close, I think I should take my money out of there, then what you do is you just take the whole amount, the whole package, okay, whether it's in loss, whether it's in gain, it doesn't matter. You just take the whole package and shift it into another investment, another company, let's say Coca-Cola, for example, and you put it in there. I'm mentioning those two names because everybody knows those names, so it's no problem if I advertise them. Who cares? So just take all the money and move it into another product, and then it's safe there, and it just carries on growing in that area. So you're not losing anything at the end of the day. You're still invested. You're still invested in the market, and you don't worry about it and you don't watch it. And if you think along those lines, that investment will be all you ever need to worry about, because that will pay your income. And that's why I'm relaxed, is because that income comes regardless of what I do here. So I don't have to stress about, am I going to make some money this month? Am I going to make some money today? Am I going to make a loss or a win, or whatever the case? How's my day going to go? I can actually, after 3 trades, 3 losses, say, that's me, I'm done for today. I'm not trading another trade today because I took losses like that. And I don't worry about it. I can come back tomorrow and carry on, because this is almost like an extra for me. I've got my income coming in from those investments, and you're covered and comfortable. So if you're young, definitely grab that scenario, go for that. If you can afford to, put whatever profits you have, whatever income you have, put it into those investments. And how's it, guys? Welcome. Hey, Daniel, welcome back. So like I say, that's quite important. Look at that. I don't know what the time delay is on this, but hopefully it's not too bad today. Hopefully it's okay. Must remember, I do live in Africa, so it's not quite as good. I was showing the other guys earlier, it's been a bad run. You see, I've had 3 losses here since last night, and I took them out quite early. So you see how important it is to take your stop losses out as early as possible. There are so many guys out there telling you not to stop loss, to just run with the trades. And do you know how much you can lose based on that? And he's particularly on a funded trader account. I had this up to 25,000 yesterday, and it's back to 24,555. So that means we've lost $445. It doesn't matter. We'll get it back. It's not a big deal. All I'm saying is, take your stop losses quickly, take your losses quickly, and be slow to take your profits. On this one, well, this was expensive. I mean, the DAX cost me $1,000. The France 40 cost me $400. The Nikkei cost me $300. The US dollar, Japanese yen, that stop loss got taken out in profits, so that made me $600. Yeah. So yeah, a bit of a loss, but it's okay. Well, we're no more trades today, eh? Okay, thanks, Kevin. Yeah, good to know the stream's all good so far. Okay, look, Andrew, you know what? It only takes 10 years. So, yeah, just have you got 10 years left? You know, it's like me as well. I might have 10 years left, definitely, because, you know, I could get into my 70s. Who knows? Why not? Put some money aside and you can leave it to your kids as well. So they'll get that money regardless. So you can do it for them. It's not the worst thing to do. I quite like that. It's a good thing to do. It's not a bad thing to do. At the end of the day, you're leaving a portfolio for them, which they can just keep. My son's actually got his own portfolio. He's more savvy than I am sometimes. Should call him dad. And my daughter as well. She sorts herself out quite well as well. So, you know, but they'll inherit my portfolio at the end of the day as well. Back into the green with Daniel. You're beating me, eh? If we had a competition, you'd be winning. Because you can see mine is in the red. I suppose I've been messing around, but mine really is in the red here. This isn't exactly the best looking. Oops, cancel. What am I doing here? Open position. I don't know what I was doing there. What I'm pressing buttons. Cost me money to press buttons. Yeah. So yeah, I got a 61 and just learning, Andrew. Yeah, you know, they're never too old to learn. But you know what? At 61, take my advice. I mean, you're only like a year older than me, 2 years older than me, year and a half. Okay, we'll play around with that. You know, you could easily spend the next 10 years creating a portfolio, putting that money away. You must remember, over that period of time, while that portfolio grows and gets larger, it's paying you those dividends regardless. So you'll be getting those dividends annually. If you've got a cash lump sum, because at our age you might have a cash lump sum as well. So you could take a cash lump sum and buy a number of shares with that cash lump sum as well. Look, what I would recommend right now is I would wait for this US 500 here to come back a little bit if you're investing in US stocks, or the FTSE come back a little bit if you're investing in UK stocks. But I would invest in US stocks. I prefer the US stocks. And I'd just wait for this to relax a little bit before I start buying again. So, you know, wait for some opportunities to come up, because you don't want to buy the shares at the most expensive price as well. Not that it matters, but yeah. So yeah, Kevin and I are around the same age, you see. So you've got plenty of time, Kevin, plenty of time, but at least I hope so. Myself. Yeah. And yeah, Daniel, that's good. That's the way to be. Be super conservative. I mean, like I said, the reason I lost a few trades in the last 24 hours is I made all the mistakes that I tell you guys not to make. I traded in too early, too overconfident, too quick, and you know, exactly that. So don't think that you're going to trade for 30 years and then go, oh, I'm never going to make mistakes again. Believe me, you make those mistakes. And that's why I have that 3-trade rule. If I lose 3 trades in 24 hours, I'm waiting till tomorrow, because I know that my mindset's wrong. Something's wrong. Yeah, no, that's the point. I will speed past you, Daniel, eventually, because it's going to be that big win that I'm waiting for. That's what I keep searching out, and it's always what I do. And that's why I was saying to Andrew earlier, you know, with the percentage income, it's a longer period. You got to look at the year, because over that period of a year, you're going to hit a couple of big ones, and those are the ones that are going to make a difference to your portfolio. And you're going to have all this mishmash in between, all these little ones, all these losses, and all these little wins, and it's actually a mess. And then it's those couple of big good runs. Those are the ones that you want, and that gives you the overall picture for the annual, for the year. That's the point. Yep, Rama, wait for the close of the candle. Thanks. You, yeah. Yeah, absolutely. So you learn your lessons, and totally, that's the whole point. Wait for the candle. And why didn't I wait for the candle? Because you see, you get overconfident and you get too clever for the market, and it happens to you all the time. Because you see, the thing is, when you see these pictures all the time, I look at a chart and I see a picture and I have a feeling, and so often I'll trade on a gut feel because I've seen it all before, and I know it's going to happen that way. And you know what? The market will always fool you into a false sense of security. Yeah, to stay in the game, you've got to stay alert, and you've got to stay psychologically right, because like I said, the market will always fool you into that false sense of security. You think you've seen it all, and then it does something strange. And that really doesn't matter as long as you take your losses quickly. As long as you take those small losses, you're still alive. You live to fight another day, we used to say when we were younger. And that's what's so important. That's the most important thing, is that you don't take big losses. You don't start panicking and running with the loss. Now, for example, let's say the DAX trade, for example. Look, this one took me out while I was sleeping, obviously, and it took me out at quite a low level, as you can see. Look where my stop loss was. That's where the arrow is, right? 189.75. Okay, so got taken out on the funded trader account as well, by the way. So that was another loss. But anyway, discussion for another day. But just so you guys know, we took the trade short here, right? At 189, was it 189.19, somewhere around there, and it goes, we're expecting it to go down. It was a red candle, by the way. It's changed color for some reason. But anyway, it was on this one here. We took the trade, you see, down here. Okay. And it looked good. And then overnight, it got taken out on stop loss at 189.80, around that area. Now imagine if you don't have a stop loss in place. Look at those green candles behind it. Look at that. If you don't take your losses quickly, this is what happens. Look at that. Look at how much it would have taken out. So, you know, sometimes you feel like it turns back on you this way and you think, oh man, but sometimes that's what happens. And that's what blows people accounts. That's what makes people poor, is following those. And then they try and double up over here to try and make it better. And it just keeps on going. Doesn't stop. So you would have doubled up here thinking it'll come back and I'll get out at break even, but it doesn't. It keeps on going to the moon. Very careful of those, guys. Be very careful. So yeah. Yeah, no, don't play with news events, that's for sure. The thing is, I don't play with news events, and I used to. I used to hang my hat on news events, but not anymore. But sometimes they can bite you in the butt and you're not even looking. That's always a problem. Yeah, when you see a pattern, take the trade. You're more likely to win. Totally, you're quite right. And always add to your wins, never add to your losses. Absolutely right. And this is the one you saw me talk about now. Never add to your losses. Never ever walk away. And you see, walking away, and that's what makes it actually makes you feel better when you see that and you think, whew, I walked away. It actually makes you feel immensely better. We got stopped out of this. Such is life. This one we were short. Let's see, France 40, yeah. So we took the short, and why is it showing the buy over there? But anyway, we took the short, and effectively we got stopped out of this one as well. So I don't know why these arrows are showing it that way around. But anyway, it doesn't matter. Not a big deal. Nikkei, same thing. Yesterday was okay. I mean, we took the short and then we moved the stop loss up, and and we actually got out okay. And then today I took the trade again on the Nikkei, thinking it'll turn down again. But once again, another thing to note, Daniel was pointing out a few mistakes. And the one big thing here is you'll notice I was trading against the trend. Pretty much 70% gamble, okay? Trading against the trend. I traded against the trend on the Nikkei. I traded against the trend on the France 40, but it was on resistance. But I traded against the trend, and on the US dollar Japanese yen I traded with the trend and I made a good profit. So yeah, you got to look at that as well. The DAX I traded against the trend, although it was on resistance. I expected it to turn around. So trading against the trend can be quite painful. That can whack you in the butt as well. It looks like everyone's quite excited today and buying, panic buying. They're just buying. It's not a good time to be buying, guys. Really not. This is when things are going to go pear-shaped somewhere down the road here. Yeah, wars are a big issue, and that's why I say don't hold your trades over the weekend, because the one thing I learned over the last 30 years of trading is that when something goes wrong in the stock market, well, I always remember 2008, that was a biggie. And there was a couple before that, the one in the 90s, and also, there was even 2011, there was something, and then and they always happen over the weekend. Why is that? Always over the weekend. You it's either late Friday afternoon or over the weekend. And there's absolutely nothing you can do about your trades in the market. Nothing. You can't do a damn thing. It's so frustrating. You know how many guys got wiped out by things like that? Because on Friday, the price is here. On Monday morning, it opens up somewhere down in the dungeons. Nightmare. Absolute nightmare. That's why I say, like your investments, you just look away and you leave them. Equities, try and buy them as cheap as possible and keep them, and they'll just pay you over the years and just forget about it. But trading can be a nightmare, especially gear trading, and you close up on a Friday afternoon and you come back on Monday morning and it's history. It's history. Look, Kokoro, I hear you. Stick to one instrument. No, look how many instruments there are to trade. Look at this. See how many instruments there are to trade here. This is just my watch list. There's a million more on top of that you can trade. And why do you only want to trade one instrument? What you've got to learn to do is identify a trade. What you've got to learn to do is to get your psychology around that, how to manage your risk, how much risk you're going to put on a trade, and how to make your profit based on that. Don't try and live, eat, and sleep one product, because I've heard a few people say that, but you're restricting yourself. Why do you want to restrict yourself to one product? Because one product might not always have a trade available to you. Let's say you're trading gold at the moment. So what are you going to do with gold? Are you going to buy it or sell it? Even if you eat, sleep, and dream this product, what are you going to do with it? Right now, I won't touch it right now. It's right at the top, and it looks like it's creating a bit of an inverse hammer up there, and it looks like it wants to correct a little bit. But look at this all the way up. It's so bullish. I won't touch it right now. I'm waiting for it to get down to a level that looks reasonable on a recovery and maybe take a buy. If you're trading one product, it becomes a nightmare. You don't know what to trade. There were times where I would trade 4 or 5 different products that I like. For example, I've always liked the DAX, always liked the FTSE, always liked the US 500. These are products that I like. On the currencies, we all like the euro, US dollar. We all like I like the ZAR because I live here. I like the euro, Great British pound. There are products that you like, but you don't need to get stuck on one product. There's plenty to trade. All you have to learn to do is identify what's happening when you look at the chart and identify it quickly. And put your levels in. Put your levels in. and okay, where have I got some levels? I don't want to sit here drawing levels in now. Here's some levels. For example, US dollar, Japanese yen, we've got a trend like rail tracks, and you can see it's running in this trend. So you know, they're all the same. All of these products are the same at the end of the day. They're not different. So all you've got to learn is the simple system that we are using here, support and resistance or trend or whatever. And then just use your psychology, just get around it, manage your risk. That's what you've got to learn. Don't worry about the product. You know what's behind the product is human beings. Human beings are trading it. And it's really not going to help you to get to know one particular product and what it's doing. Because it actually, you'll also find over your trading career that your preferences will change between products as well. For a couple of months, you'll be trading the DAX left, right, and center because it's just working for you. And then it'll die off, and then you'll go and look for something else, and you'll be trading the euro, US dollar every day. You don't restrict yourself, really don't. But yeah, I'm not supposed to. I'm not supposed to. It's just idea. I'm not supposed to give you that advice, but just from my side. It's not looking good for this weekend or them bombs flying. Totally. I've been waiting for this war. I can tell you what. I don't know what's going to happen. The world's in disarray. Yeah, you see, that's the best thing to do, Daniel, is what I've been doing. You see, like this is the perfect example. This US dollar, Japanese yen. I put a trade in, and I put a $900 stop loss in, and it was down here somewhere, the stop loss. And then I had a $1,800 profit target, and I left it, and it went up, and then I moved the stop loss to cost, and it kept on going, and then I moved the stop loss to about $600 in profit, and it kept going, came back, took it out. And that's going to happen, but it's okay, because the way I look at it is, yeah, okay, I got the profit. What I did is I just trailed my stop loss up. I kept it far enough behind so that if it did take it out, because when I put the stop loss at $600 profit, I was about $1,100 in profit. But I haven't lost anything. What I've done is I've gained my entire stop loss back, which is $1,000 that I would have lost. Plus I gained another $600 profit that I wouldn't have had. And so I'm not going to say, oh no, I lost that's $500 between 1,100 and my stop loss. No, I'm not going to say that. What I've done is I've moved my stop loss up to an area where I've made a decent profit, and that's kind of what you're looking for. Because had it gone onwards all the way to the top and made the top profit at the top, that would have been fantastic. That would have been one of those running trades. But clearly, this is not a running trade. It hasn't gone that far, and it started to falter and come back, and it's falling over. So, okay, let's take the stop out. So be it. We make a smaller profit than what we expected, and that's why I say to you guys that the win ratio is irrelevant, because that's going to show my win ratio as a 70 or 80% win ratio, and everyone's going to be like, Rob's a genius trader because he's got an 80% win ratio or a 70% win ratio. He won 7 trades out of 10. He only lost 3 and he won 7. No, because that winning trade didn't make me the profit that I wanted, but it's going to show as a win ratio. That's the problem. You'll get this mismatch of little wins in between, and it's always going to show like that. And then when you try and boast about a winning ratio, that doesn't make sense. What you're looking for is what Andrew was asking about earlier, and that is profit. You're looking for profit over a period of time. So you're looking for a profit margin, and that's the point. Like Daniel said earlier, he's gone into the green. That's what you want. That's what you're looking for. Not win ratio. Win ratio, irrelevant. There's nothing wrong with IG, Kevin. It's a great company, and yeah, no, you can't go wrong. Just check their swaps and their spreads and what they're charging and that sort of thing. What kind of deal you can get. there are so many of them out there, so many people available, so many to trade with. I mean, if you just look on this trading view, there's a whole bunch. Most of them are American though. Different brokers available, interactive brokers, all these different ones. Just see what they've got, what's available to you, and what you can get. But there's some highly good recommended brokers out there. Ava Trade, gosh, I mean, in South Africa, there's Purple Capital is also in the UK, so check that out. Yeah, but nothing wrong with IG. If you want to trade live, they'll look after you. They won't. They're not gonna. Can I swear? Screw you over. That's what I like about them. I'd actually rather pay a few cents more for a broker and know that they're still going to be there tomorrow morning than get these guys that offer you, free trades and free this and pay less and don't pay this. But I've never heard of them before, and I wake up on Monday morning and they're buggered off with the money in their account, which is another reason don't take all your money and put it in the account. If you decide, I want to trade on a $100,000 account, or I want to trade on a $10,000 account, or I want to trade on a $50,000 account, trade on that size account, and then keep the account at that size. If it grows, if it doubles in size, take the money out. Don't leave it in a trading account, because trading accounts are not like banks, eh? Banks, 8 times out of 10, they'll still be there. Trading accounts, maybe 6 times out of 10. So just be very careful. Trading accounts are not banks, but there are a few brokers. For example, I know IG, they've been around for a long time. If they've been around for a long time, that's pretty good. Pretty good. Yeah, look, Daniel says that nothing is for free. The price might differ, but also, sometimes it's worth paying just a few cents more for a broker to protect your account, because you are putting a lot of money in there, even if you're not putting all your money in there. $10,000, £10,000 is not to be sniffed at. It's a lot of money. And if they disappear with your money, it's painful. It's a lot of money to lose. So no, don't even go there. If it's like $100,000 is a hell of a lot of money to risk, and you don't want to lose it. Yeah, look, crypto. You all know my point of view on crypto. As far as I'm concerned, crypto is fresh air. And so many people have said to me, but Rob, you would have saved so much money if you had bought crypto. Yeah, and I could have lost so much money if I bought crypto as well. That's true. At the end of the day, I don't buy into pyramid schemes. I don't buy into something that doesn't have an asset value as far as I'm concerned. And I just cannot find an asset value in crypto. I cannot find it. So I'll trade it today, 5 minutes, tomorrow, whatever. Definitely not over the weekend. And I just see it as one of the riskiest instruments on the planet. I will not invest in it. I'll trade it, but I won't invest in it, because for me, it doesn't have any intrinsic value. It doesn't have any asset value. For example, even currencies have a value. For example, the US dollar is pegged against the economy of the USA. What's in reserves, what buildings the USA has, what military it has, what money it has, what value the country has. So the country has a specific value, and the US dollar is pegged to that. So there's a asset value to the US dollar. There's an asset value to the euro. There's an asset value to the South African rand. The index that you trade, the US 500 S&P, it's got an asset value against all the shares that are piled into it. So it's got a value. Where is Bitcoin's value? Where's crypto's value? Where does it come from? And they talk about blockchain technology and this, that, and the other, and it makes no sense to me. How can anyone own the internet? No one owns the internet. So no, crypto, it doesn't have any asset value. So for trading, great, but for investments, if you're going to do those investments we talked about, and just buy shares, companies that have an asset value. Don't invest in stuff like that. That's for sure. Yeah, that's it. Just use it and make it work for you. Only extract the value out of it. And that's the thing. You don't want to get yourself all, wake up and the oak's gone. Like old Bernie Madoff. I love his name, Bernie Madoff, with all the money. Everybody woke up and he'd made off with all the money, and he was such a respected trader in the U.S. markets and all the rest of it. And yeah, I tell you what, another pyramid scheme. He just took everyone's money. So yeah, you always got to watch out for these things. They're out there. They're just waiting for you, just waiting to grab you. At the end of the day. So yeah, stay away from that. I definitely would. That's for sure. Okay. CFD, Kevin, is contracts for difference. So spread betting is just it's a form of futures spreads. So contracts for difference is like you've got here. You have an instrument and you can buy contracts and they're geared. So for example, 10 to 1, 5 to 1, whatever the case. But you don't see any, and there's no tricks to it. You can buy it at a price, you can sell it at a price. The instruments expire after a certain date and they renew them, and you can just carry on. So contracts are put together by brokers. The spread betting is usually to do with the futures. They expire. Futures are like, it's effectively what you're trading, but it's just the way it's put together. So what you do is you buy it at 57 and you bet that it's going to make 58. And if it does, it pays out. If it doesn't, it's then you lose it. It's got to reach that target or whatever the case. So just have a look into it. And Kevin, take the CFD, take the contracts for difference. Take the contracts for difference. CFD is much better, but you can read up on it as well. But no, you want to be doing the CFD. The contracts are better. Much easier to trade, much less hassle to trade with, and yeah, no, I've always preferred going with the CFDs. Let's put it that way. CFDs are kind of banned in the US, I believe, something to that effect. But yeah, well, you don't pay tax on your gains in the UK. Sure, I must move to the UK. Doug, were you here when I was showing you gold earlier? Yo, no, wait, don't. Don't short it, don't short it. Not yet, no. Yes, it will correct. I agree with you, it's gonna correct. But look at this. The structure is solid, eh? Solid. This is almost a lamp pole formation. You know what I refer to as a lamp pole formation? It looks like a lamp pole as it's going straight up. And the dangers of a lamp pole is exactly that. It can keep on going. Don't think that the market... Don't look at the market like a supermarket. If something's expensive in the stock market, whether it be a commodity, an index, or a currency, it means it's doing well. It's doing really well. And so it's not expensive. It just means it's doing well. And if it's at the bottom, it doesn't mean it's cheap. It just means it's doing really bad. The calling it cheap and expensive is the supermarket mentality. When we go to a supermarket and we're looking for a special, so we buy it cheap. Or if it's too expensive, we don't buy it. So be careful of that mentality in the stock market, because the stock market, the stock market, it'll always fool you into a false sense of security, as we said earlier. So yeah, well, if you're not paying tax, no tax to pay in spread betting in the UK. Phew, okay, I suppose that sounds good to me. No tax. I didn't know you get that in the UK. That's great. No tax. Um, Back to Doug. Yeah. So yes, I would be very cautious about shorting gold in a situation like this. It's too high. It's just too dangerous. It could come down, but it could carry on going. So there's no signal here that says go short. If you want to go short on the gold, you literally have to wait for it to get past this level here, which is at 26.28. If it breaks through that, then it breaks structure. And if it breaks structure, then it's turning around and going the other way. You have to wait for it to break structure. Don't just short it at the top, or what you think is the top. Wait for it to break the structure before you trade it. So structure is down here. So you want to wait for it to basically go through that before you decide to take a short on it. Okay. No, I don't use the same lot size. I use the same stop loss size in currency value. So, for example, on an account like this, I'd use $1,000. On an account like the funded trader markets, I'd use $250. That's it. And then I'll work out where my stop loss is going to be. And then I'll work out the lot size based on that. And then take that. The lot size changes. It's the value of the stop loss that stays the same. Yeah, that's another thing, Daniel. You say the head and shoulders there. Always wait for the head and shoulders to play out. I love the head and shoulders. It's one of my favorite patterns, but you always wait for it to play out completely. In other words, break through the line, and then you get a head and shoulders if you see a head and shoulders. Just have a look on the day chart. You see, look at the day chart. If that's not a lamp pole, then I don't know what isn't. That's a lamp pole formation, so pretty dangerous stuff. Okay. Lamp pole formations. What lamp poles do? Good thing about a lamp pole is what lamp poles do is they fall hard. They fall very hard. So when it falls, it's going to fall big. So if you've got room to maneuver and you can take the drawdown, then you can short it with a view to when it does fall, it's going to fall hard. So you could do that. Because lamp pole formations do fall hard. They fall very hard. It's fooling you into a false sense of security there, bud. What that is not a long wick. That is an undecided candle. That's an indecision candle. You see here, you got a wick on the bottom, you got a wick on the top, and you got a little body in the middle. What that means is, if you look at it as all the traders behind that wick, that's a whole bunch of traders that don't know whether to go long or whether to go short. They're sitting there like yourself thinking, should I go short? Should I go long? That's what that candle is. It's a whole bunch of undecided traders. That's what that candle is. Okay. Just so, by the way, a lamp, not a lamp hole, a lamp pole. A lamp pole, the one that stands outside your house with a light on it. Lamp pole. Okay. So the lamp pole formation is when the price goes straight up and it just keeps on going up. And it creates this long straight up. It can only fall over. It can't go anywhere. It just keeps on going up. So it's kind of imbalanced. It's holding on. It's like on a stick. Lamp pole. Okay. Just so you know what I'm talking about. Yeah. So maybe you heard lamp hole, and it's actually lamp pole. Lamp pole with a P. So yeah, craft of voice. How's it? Yeah, welcome. It's good to have you on board. No tax, eh? Yo, I think I must move to the UK, man. No tax. Paying no tax. Oh, that's great. So just find out for them what the ins and outs are on that. and they'll probably give you a whole rundown on it and all that sort of stuff, and you can just check what's the best way to go. Okay, so just be careful here. Sort of, Daniel, just look at this, eh? This is also a bit of a flag on the gold, eh? And the flag is normally a continuation pattern. If it's just running along here, it could just carry on going straight as well. Yep, the pole goes in the hole. At least now you know what it is. Now we know what we're talking about, eh? We know what we're talking about. So that helps to know what we're talking about, at least. Can't believe what this DAX is doing, eh? Whew. I know that Lagarde is speaking today or something to that effect, but this is crazy because there was a triple top on here, and that resistance was strong. That's a strong breakthrough, just like the gold. Now there you go, Joe. There's a lamp pole. You see that? That's a lamp pole. And you know what happens with lamp poles? They fall over eventually. So you're just waiting for a change in structure, and you'll probably get a decent short on it. Unfortunately, I was short on it, and it's too early. The VIX, there's a lamp pole. There it fell over. Okay. Can't trade the VIX on this product, unfortunately. But I've got other places where we can trade it. Okay. Like I said, no more trades for me today. Lost enough trades today. Yo, that was a bad one, eh? Look at that. That was a rough day. $413 loss. Yeah, that's a biggie. There you go. That was a good day, that. So guys, these are funded trader markets. They've actually been okay. But as I said to you, I'm trying to figure out the best way that you guys can trade on funded trading, because it's always been a bit of a tricky situation. And I prefer to trade with real money. It's much easier than this funded trader thing. But for those of you who need it, it's there. It works there. Ah, good. Glad you can see it. That's perfect. Look, patterns in the market, it's good to get to know them. Go on Google and look for some pattern sheets, and there's about 10 that are really important. Download that for yourself, and just try and spot them in the market. And over time, you'll get to know them. You'll get to see them. You'll get to identify head and shoulders quite quickly. You know, like if I look at this Nikkei on the 4-hour here, it almost looks like there's a head and shoulders developed here right now. And head and shoulders means it will go to that level there. It'll move the length of the head. It'll move that distance on the other side. There's a very good chance if this breaks through this resistance here, it's going to be a head and shoulders, and it's going to go through. So perhaps Daniel will see this head and shoulders, knows what a head and shoulders is. You get cup and handles, all these different things that if you can identify them, that's great. Just remember candle identification, you can download that as well. It's good to know what the candles are, but I prefer not to trade with the actual candle itself, because the candle only tells you what's happening for the next time period, and they're not that reliable, let's say. But it does tell you what the market's doing. For example, a nice big red candle tells you that something's very bearish. A nice big green candle tells you that something's very bullish. The tails tell you the sellers and the buyers are getting in and out and that sort of thing. So you can, and the shaven heads at the top tell you that it's strong. You know, you can learn a lot from a candle, but don't play too much into candle patterns. They can fool you. Yeah, you see, upside down head and shoulders. You see. Yeah, oh, I didn't see that, Rama. Sorry, the max number of trades I'll take on a day. I don't have a max. I don't have a max that I'll take on a day. Look, it's difficult to take a lot of trades in any one day anyway. On an account like $100,000 account, I will open up to 10 trades if I can and leave them, because it's a round number. And if I am able to open 10 trades, I'll open 10 trades and they'll run. And I know that I can handle that risk. on a funded trader account, and as you guys know, this is the first one I ever opened just to see how it works. Can't do that. I can't trade like that because of this drawdown situation. So actually my rule applies more to this than it applies to anything else, because if I take more than 3 trades, I could actually end up closing the account down on those losses. So, you've got to be careful of that. But yeah, no, my rule is if I take more than 3 losses, I won't trade anymore on that day. That I'll walk away, because I know the last 24 hours I took 3 losses. I'm thinking, well, I got to figure out why. I think I've figured out why. It's my mistake. I got in too early. I made those mistakes. So I've just got to clear my mind, come back tomorrow with a fresh look at the market and do it again. Because I like to get a look at the market early on. And then, I'll take my trades and I've made my decision. So I don't want to start. And the other reason I do that is I don't want to find myself revenge trading, because you can easily find yourself doing that. If you start losing and then you start getting back into trades, you can find yourself trying to revenge trade the trades, and you can end up taking like 20 trades and over trading, just trying to revenge trade something. So that's why I say 3 losses, walk away. As far as the taking the trades go, I will take up to 10 trades on any one account if I can. On a normal account with money in it. On a funded account, I tried taking 3 trades earlier, and I looked at it and thought, if that goes wrong, we're in trouble. So no. Don't worry about the 10% risk. Okay, here's the thing. You can take a 20% risk. So let's say you've got $100,000 account. Okay, that's like this one here, $100,000 account. Now you take 20 trades. 20 trades is $20,000. And you say to me, yo, that's $20,000. Okay, that's a 20% risk on the account. 20% risk on a $100,000 account. But each trade has got a maximum $1,000 risk. So each trade's got a maximum $1,000 risk. Now remember what I said, Rama. I said the market's a 50-50 game. Whether my system's good or bad should be that out of those 20 trades, that 20%, out of those 20 trades, possibilities are, the probability is I'll lose 10 and I'll win 10. But what I want to do is I want to lose the 10 at $1,000, so I'll lose $10,000, but I want to win the other 10 at $2,000, making $20,000. That should give me a 10% gain on those trades. Just a thought. So you are risking 20% of your account, and it would take a really bad week and a really bad day to lose all 20. It really would. It would be an absolute disaster to lose all 20 in a row. It can happen, but it shouldn't. And that's why I say if you can make more on your wins, then that kind of risk is covered by the fact that you're only taking a 1% risk per trade. But if you've got 10 trades open, the overall risk is 10%. You win 5, you lose 5, you're in the pound seats. You're doing okay. So that's why I say, Rama, it's a total risk, but the risk is spread. So what they say to you when you say risking your account or maximum risk is don't risk more than you can afford, that you can't sleep on, but also don't put all your risk into one trade. Spread your risk across the 10 trades, or 20 trades, whatever the case. It's like having equity. I mean, my equity investment account will always have at least 10 companies, at least. And a lot of people will look at that and think, oh, that's quite a lot of risk, if it all goes down. But there's no gearing. You own it and that's it. I mean, if you own $1 million in shares, that's it. If they go down 10%, they go down 10%. You know what I mean? And the biggest crashes in the world are around 20%. So no big deal. No worries. You're pretty well covered. So just, so that you understand that, it's actually, you got to get your mind around these things. And I understand that because it takes time to work it out. But it's just about spreading your risk. That's all. Um, Thanks, Doug. Yeah, no, totally. I mean, you're looking at it and thinking, I want to short that, I want to short that. And look at that candle. It's so inviting. And believe me, guys, we could be wrong. We could be totally wrong. This thing could go to down to the bottom and we look at it and say, why didn't we take the short? Don't feel bad about it because believe me, this thing's going to suck you in and then you'll be sorry. Wait for it to break structure. And if it breaks structure, then we get in. It's the same thing we were talking about earlier when I overtraded earlier and I traded into the trades too early before the candles closed because I got sucked in and that looks good. Yeah, I saw a candle like that. And I was like, I got to get in here, got to do this. And yeah, that kicked me in the butt, And that's the problem is we psychologically make those mistakes all the time, every day. And if we don't, some of the simple rules have got to be followed. You've just got to be very careful. So you need this to break the structure, to say to you, hey guys, I'm no longer bullish. I'm now turning bearish. Then you know you're at the top. So those are your three types of trades. Like I said, you trade with the trend, you go up with the trend, or you trade in a range when it's in a range, or top and bottom. But the top and bottom is not just get in at the top or get in at the bottom. It is wait for the structure to break and then get in. And then the structure's changing and you can move. This structure hasn't changed at all. What you've got here on this gold is a very neat little flag pattern here. And the scary thing for you, Doug, is if you went short on this, you'll notice something on my little flag pattern here that's a little bit dangerous. And that is that tail actually broke out of the flag pattern. And that's a dangerous thing because if that breaks to the green side and goes, it's going to run like it did earlier down here somewhere. Once it breaks out of these patterns, they run. You see how it broke up here? See how it broke up here? It runs. So they can run quite hard. So if it breaks down below the flag pattern, it starts to come down here, you can start to nibble. You can start to, take a chance and gamble and nibble if it breaks down below the flag pattern. So somewhere around this area here, you could look at a nibble, a small nibble, but you really want it to break through that area there because it's probably going to come down to there and then shoot on up. So what I would rather do with gold is wait for it to get to this level here and then take a long trade. Rather wait for that. Then you've got a decent trade. Because then you're trading with the structure, you're trading with the trend, you're trading in the trend, and you're probably going to get a good trade out of it. Other than that, the other thing you could get off this is if it does the old breaks through that level, okay, goes up, comes down, retests, and you can get a long off of there as well. That's also another way to trade gold. But going short here, pretty tricky. Pretty tricky. Okay. So now we've done the whole gold research thing, and that bar is just getting longer, isn't it? Yeah, that's what I love to see. Yeah. Mental awareness needed. Yeah, you've got to be aware. You've got to keep your eye on the ball. And like I said, no matter how long you've been trading, you can make these mistakes. Becoming profitable in the stock market, the odds are against you. The odds are always against you. So many people lose. But I do believe it's because people don't see it as a career. People see it as a way to quickly throw some money at it and make millions, rather than understanding that there's a slow process. And if you can get around the process and you can understand that you can make money from it, but it's not a quick fix. It's not like gambling. The better you can do. Okay. Look, the ES should be the same as the US 500. Let's have a look at the ES anyway. I'll just see. ES many features. Yeah, pretty much the same. Okay, so look into the ES chart. Last time I smashed it. Okay, so I'm just a little bit concerned that it's run so hard, but it is in a flag pattern. It's broken out of the flag pattern. Okay, here we go. Let's have a look at this just quickly. We're going to have a look at the ES quickly, guys. I'm just going to have a quick look here. Just see what we've got, right? Let's just have a quick look here. Because I got a feeling. Okay, there we go. Okay, let me just take this back to the 4 hour. Okay, let's see what we've got out of this little guy here. A little bit of a flag pattern developing here. See, it broke out of the resistance, and that's probably where you made your profits. Okay. A little bit of a pattern here. Bit of a pattern here. It's broken out of that flag pattern. What I would say is, okay. Let me just think here. What I would say is, wait for it to come down to this level on top of the flag and bounce out, which is at 57.95. Wait for it to come down here, give you a green candle and bounce out. If it bounces out, because if it breaks back into this, it could come back down to the main support, which is 57.14. So it might come back and retest this. It has broken out quite strongly. It will come back and retest most likely and then go. So it's probably going to come back to about 58 and then go. Looks like it wants to run though. Does look like it wants to run. You've got a strong run going up here on the ES. So yeah, it's a long trade, not a short trade. It's a long trade. So yeah, go for it. Okay. Jumped in and gone short as gold. This is my only demo account, so I'm taking the risk. One way and way or another. Okay, Kevin, you've gone short on the gold. That's quite a biggie. You can trade the VIX on IG. Chris, IG does trade the VIX. They're actually quite nice for the VIX. I did see a gap there just below the gray. Yes, on the ES, but the thing that worried me about this gap, Daniel, is it's not on the US 500. It's only on the ES, and I don't know why. Because the ES should be following the US 500. It's just a mini. It's just a mini contract, so it shouldn't be that far different. But yeah, gaps get filled. Gaps do get filled, but on this, I'm just a little bit concerned that something different happened here with the brokers or something, because like I say, it should be following the US 500. And it's not, because the US 500 doesn't have that gap. It has this. So, or this, yeah, there is. It's got that long candle there. So, but weird. Gold take profit 2,700. There you go, Ngosi. That's it. You're looking at that, yeah. Yeah, cool. Okay, yeah, no, good. Yeah, so don't try shorting the ES, not yet. Anyway, it's probably gonna do a bit of a bounce and go straight up and carry on going. Gold 2,700, you say? Yeah, could reach it. You don't know. You see, if you look at these bounces, it just keeps on going. So there is a good chance that it's going to go to 2,700, and not much you can do with that. Yeah, okay. What else have we got? One day, we'll have thousands of people watching, and we'll be able to do a lot more. You know, at the moment, it's just us. But yeah, it's worth it, because we're a nice little community growing here, and It's nice to have a community. It's nice to get together with everyone and talk about trading, because trading can be a lonely game. I don't know if you guys have noticed that. Some of you are working, so it's not so bad. But for those of you that don't work or just trade or, work from home, it can be a lonely old game. And when you don't have someone to turn to and ask, it can be even lonelier, to be quite honest with you. So yeah. So on the gold theme, yeah, I think, there's nothing wrong with that 2700 call. Let's see it, Gossi. Let's see if it gets to 2700. It'll be interesting. You're trading copper. Okay. Does it have much liquidity? I don't normally trade copper. Oh, it's also hitting the top. So, okay, interesting. Very interesting. Do trade oil there. Oil looks interesting. It's going down again, which means we'll pay less for petrol. Hopefully. It's funny that how the oil price goes down, our currency gets stronger, and they only take the petrol price down by a couple of cents, and the price still stays at this immense height. It never really makes sense. It's a bit like inflation with the food. Put the price up, but they never put the price down. Totally. Trading copper futures. Okay, that's quite cool. I don't normally trade copper. That's quite interesting. All right. Quite interesting. But you see, that's the thing where somebody was talking about having a product that you trade with and that sort of thing. One product. There's lots to trade. There's so much that you can trade on the markets. You can go mad. I mean, don't restrict yourself to any one product. So like Doug here is trading copper, gold, all these things. That's the way to do it. That's the way to do it. If you can trade everything, because it's all the same at the end of the day. It's all about the psychology and getting your mind around it. I just spotted something else here on gold that might be of interest to you guys, especially the person that just called it 2700. Spotted a demand level there. It's also right on the support. So yeah, this might be a very important level, this 2630. I would say don't short it, wait for it to go long. If it comes back down here, take a nice long trade. Then you will get the 2700. If it does come back down here, because remember, this is in kind of a flag pattern as well. It looks pretty good. The one thing you got to understand about the metals, Doug, I don't know how long you've been in the market, but market with metals, with mining, they're all very cyclical. Cyclical meaning they won't just, for example, it's not a good investment. It won't just keep going straight up. It'll go up, and for a couple of years it'll be up, and then it'll come down. It'll be at the bottom, and then it'll go up again, and it'll be like a sine wave. It just goes up and down, up and down, and up and down. That's what I mean by cyclical, and it's great for trading, fantastic for trading. But whatever you do, don't invest in commodities, because what I've found, for example, if you'd invested a couple of $1,000 in the S&P in 1950, say for example, you probably would have had a couple of million now. And if you'd invested the same amount in gold, it wouldn't have done much. It would have been a couple of thousand. So, that's the difference. The S&P would have given you that whole advantage over time, and gold not. So commodities are cyclical. They just sort of stay where they need to be. I mean, I wouldn't be surprised if we look in a couple of years' time and gold is $1,500 again. That's how it is. It doesn't even run with inflation much. So commodities, cyclical shares, they're not great for investments. Yeah, 3 years is a long time. You must be fully qualified now, Doug. Yeah, no, it takes a long time to learn this game, and You know, so many guys that I know think that they can just get into trading and they'll be successful today. It's easy game, easy. Till they start trading and they find out how easy it is, eh? Yeah, not so easy. Not so easy. It's one of the more difficult things to get your head around. One of the more difficult things to get your psychology around. And like I said to you guys earlier, even after 30 years, I'll still take 3 losses in a row because I did something stupid. So that's the point. You know, you can't win every trade. The market will always fool you into a false sense of security. The market is always a 50-50 game. Doesn't matter who you are and how good you are. Yeah, I don't think I've got the relative volume on here, but I'll do a video about volume. I'll do a whole thing on volume and how it works and all the rest of it. I'll put it together. I don't really bother too much with it, but what you're looking for is the amount of volume that's being traded. It gives you an insight as to how how many people are actually trading and whether it's going bullish or going bearish. I'll have to put a whole video together on that view. It's quite complicated. So I will explain volume to you. I'll do the whole thing on volume. I used to trade with it at one time. I used to use it, but I actually stopped using it completely because there's always volume in these indexes and these currencies. And volume, don't use volume with currencies, by the way. Don't use volume with currencies. Use it with the indexes, use it with shares, and you can even use it with commodities, but don't use it with currencies. You're wasting your time. Okay, currencies don't work on that. You won't make money with volume on currencies. You probably won't even make money with volume on indexes, but we'll show you how it works anyway. It just gives you an insight as to who's trading. Like I said to you, when you look behind the lines, there's human beings behind the lines, not just lines. And that's what the volume is. The volume is the people that are trading, the amount of orders that are in there, and which way the orders are going. That's what it's all about. Okay. These guys and their WhatsApps at this time of the day. It's unbelievable. First blown of accounts, but things are getting better. Yeah, no, totally. Things do get better. Things always get better. Yeah. It's easy till those reds come knocking. You're totally right. Yeah. The reds come knocking. It gets a little bit tricky. It gets out of hand. So I think, yeah, we're going to have to put a whole video together for you regarding volume so that I can explain it properly, explain it nicely, because it needs quite a bit of detail. But yeah, don't play too much into that. A lot of guys trade with volume and they only use volume, and then they start adding this and adding that, and you just add too much into your trades, and it just gets overcomplicated. Like we always say, it just gets so complicated when you're trading. It gets out of hand. How many of you guys have blown accounts? Have you actually blown a lot of accounts? I've got to say, I've always been kind of cautious with these accounts. And I'm one of the few people that can probably boast that I've never blown an account. I've actually never blown an account. That's quite strange, actually. Maybe it's just my cautious approach. But yeah, I've always managed to not blow an account. Yeah, well, those home runs need to come more frequently. Hold the record for the most. No, blown challenges. Yeah, I mean, there's a good chance I'll blow this challenge because it's a challenge. The trouble with the challenges is it's not like a normal account, man. You know, like we were speaking about earlier, a normal account, you put $100,000 in it, and you can work with that whole amount of money. And if you lose the whole amount of money, I mean that's quite a blown account. But the funded accounts, that's kind of an unfair one because you can only, like for example, today I was a little bit like, ooh, because you can only lose $1,000 on that account, then they'll shut the account down, and that's kind of, that's kind of tricky. So yeah, a lot. Yeah, no, don't feel bad. We all lose money, eh? I mean, geez, we have our bad days and we have our good days. Don't worry. Don't be embarrassed about that. That's normal. That's so normal. Um, See, there's old Seppo saying, blown many an account. Yeah, there you go. Um, it's all about risk. It's all about managing your risk. Uh, there you go, Chris. Yeah, you're a bit like me. You're probably cautious like me. And if you haven't blown an account in 10 years, like myself, then definitely you are a cautious person who understands risk management a little bit better than most. So yeah, that's fair. Fair to say that if you haven't blown an account in 10 years, you're on the right track. You're on the right track. Um, I had that trade, and like I said, I made a profit with it taking out my stop loss, but now I'm out of the trade. Now that's disappointing. But I promised myself no more trades today. So that's it. It's okay. Enjoy, Chris. Enjoy. I made the money out of it already, so it's okay. It's fine. I'm happy with that. I'm not going to complain that I made a profit. That's for sure. I am going to complain that I made a loss on this one, but that's okay. I made a profit and then I made a loss. So everything I made, I probably lost. It's on that particular trade, the Nikkei. Such a good trade to such a bad trade. Yeah. Um, yeah. My patience is on another level. That's for sure. I am very patient. Like I said to you guys, I actually don't sit and watch charts. I prefer not to. I prefer to choose my trades, put my levels in place, and then go. I do have the bad habit of checking back because we all do that. We all want to know how our trades are doing, but I don't sit and watch the charts all day. That's why I trade the 4 hour. If I wanted to sit and watch charts all day, then I'd probably trade lower time frames because it's much faster. To sit and watch a 4 hour chart is just, I might as well sit and watch paint dry. It's one of the reasons I started the YouTube channel, so that I could show you guys that trading is not that simple and not that easy as people say. And it also gives me something to do. I had 10 questions to answer when I registered for live account on IG and got 9 out of 10. So I must be learning something. You're doing good. You're doing really good. You're doing good. Yeah, you're doing really good. Yeah, the point is, you see the risk. Like, for example, that little rule that I've got where you lose 3 trades, walk out. If you've got your risk factor and you can walk away and just come back another day, then you keep your accounts open. The whole basis of it is learn to keep your account, learn to protect your account at all costs, and then you'll be okay. I think one of the difficulties is if you need to make money out of the account, that's when it gets tricky because you start making desperate trades. Because at the end of the day, what you've got to do is you've got to wait for the trades to come to you. And if you can't wait for the trades to come to you, that's where it gets out of hand. I did have someone that I was teaching one time that was close to me, and they needed the money. And that's where I saw the difference is the desperation of trading and trying to make the money quickly, and then you end up losing. Got to be careful of that. If you don't need the money from that account, it's much easier to trade it because you can leave it and build on it and invest it. But for those of you that need to make an income off it, it gets tricky. It does get tricky. I've seen it. I'll thank you. This YouTube channel has been one of the biggest blessings in my trading journey. I thank you. Thanks a lot. It makes me feel better. It does. I'm glad I'm helping, at least. That's great. And pleasure, Ivan. Thanks, man. Thanks. Yeah. I don't have a Discord. You know, that's probably my next move. It seems everybody's got um, these trading Telegram channels and Discords and whatnot. I don't, and I'll look into it. It might be an idea for us so that we can chat, that sort of thing, and we can put trades on and stuff. I see the guys put their trades on there and all that sort of thing. It's funny, I was thinking about it this morning, is what do you do with that and how does that work, and is it free, and all the rest of it, because I don't want to be charging you guys for something like that or anything, or myself, or paying or anything to that effect. So, but I'll have a look at it and see, and see how it works. We'll see how we go. Yeah, no, that's perhaps you can let me know what the best way is to go about having a Discord channel for us. And I'll have a look at it and see, and see what we can do with it, and if it's worthwhile. Yeah, I guess that works. Share the losses and the wins. Yeah, no, that's cool. Now, you know, it doesn't bother me from my side because I'm so used to it. I know that there's going to be big wins and the losses don't affect me that much. All I say is that when you are in that mode, don't push it. You know, that's all. Yeah, and you know the trouble with the ICT strategy, I see you say you wasted time trading that strategy, Shippo. You know, my thing as well is I've seen a lot of guys get into that, and it was very, very popular. Very popular. It's very much based on what we're doing here. It's very much based on the Wyckoff system. The Wyckoff system was invented in the 70s. Very similar thing. But the Wyckoff system actually is something that works. But it's what my system effectively is an offshoot of the Wyckoff system, and very much simplified to the point where it's not complicated anymore. You can just take a trade. But ICT, they went crazy. I think they were charging you guys millions for a course and going mad and getting everybody into it. And I'll tell you what, absolute nightmare. Absolute nightmare. But people are starting to find out now. 20 minutes and 1 hour. Yeah, that's actually quite a look. The 1 hour is cool, and the 30-minute charts, well, you're working 20 minutes, but yeah, it's actually quite cool. Actually, quite cool. It's actually a good time frame to trade the 1 hour. I just use the 4 hour because it's just easier for me at the end of the day to do my thing, let's say. Because I do my thing. I do like to go out and go to the beach and go to the shops and all the rest of it as well. And I just sit here all day. Yeah. Yeah, so maybe if I get I'll get a Discord channel or something together sometime, and maybe we can chat to each other and whatnot. We can all chat about what we're doing and what's next and what have you, and we'll see how we go. Okay, that's great. Anyway, it's been quite a decent session, quite a long session. I noticed someone mentioned on the replay that this chat doesn't come up. If you go to the top of the chat where it says top chat and you click on it and change it to live chat, the chat will come up. But what I found is the video itself on the replay, I don't know what it is, but it takes a hell of a long time for it to settle itself or to finish uploading on YouTube or whatever. It uploads on YouTube and you can watch it, but it's before you can do anything with it, it says it's still processing somewhere in the background, probably processing it up to 4K or something. I don't know. And while it's doing that, the chat's not there. The chat's not available. And I noticed it takes almost a day for the chat to become available. So if you're watching a replay and that happens, it's probably just going to come up a bit later on. And if you're watching a replay and the top chat's not there, just click on it at the top where it says top chat and change it to live chat, and that'll actually work for you. You'll be able to see the live chat or the previous chats and whatnot. Yeah, no, but we'll do the Discord definitely, and we'll get to that. Okay, so I'm gonna head off. It's already 4:20 on my side. Don't know what time it is there by you guys, but quite a late day. Tomorrow will be another video out, and then obviously Saturday I'll do the run up for the week, and we'll talk about the trades that were and the trades that will be. I hope you guys all loved my video about the millionaire trader. I hope you enjoyed that. That was a bit of clickbait there, eh? I have to do that because you know what I found is the guys are clicking on these youngsters' videos, turn $100 into $1 million, and it seems to be the way to go. Yeah, 3:20 p.m. in Scotland. It's I don't know if I could even speak Scottish anymore. Yeah, no, fantastic. Okay, so let me hit the road. Let me be off. And I shall chat to you guys soon. And let me see what I can do about that Discord channel. Maybe I can get it up and running for next week or something. Let me just see what's available and how it works and all the rest of it. I mean, it's not something that I've used and not something that I'm using at the moment. So let's see how we go. Okay. I'll be off. And we'll be on our way. Cheers.